Today, we are asking the uncomfortable questions. Is your life insurance agent required to act in your best interest? And should people who buy these policies be able to see the commissions publicly from their agents? And when agents sell advanced policies, whether it's an advanced strategy or when it comes to whole life and IUL, should there be more licenses that are required? And at the end of the day, does there need to be a reform? We're having these conversations today not to attack the industry necessarily, but to examine what's working and what's not. And Caleb and I just watched a video by this individual, and she has some very strong talking points in regards to buy term and the difference, the industry as a whole life and IUL. And what we want to do is we want to play this real quick. Then we want to reflect and talk about this video, and then also reflect on the questions that I just brought up. So with that being said, let's play the clip.
And Dom, before I jump in, let me just give a little bit of context. I will say that when you take a step back with this whole regulations, it's a really good conversation that we need to have more of. I think if we're not willing to acknowledge issues in our space, I feel like we lose a lot of credibility. And at the same time, I do feel like things get I feel like you can always look at one example. Like you could look at the failure rates of business and say, well, starting a business is hurting more people than it's helping. So let's just make it illegal, which that's like a deep, deep form of communism. It's like there should be no personal freedom. Let the government do everything. And I know for those of you that are like, wow, that was a crazy take. It's just regulations. The more regulations you have on something, I do believe there's a form of wanting to do the right thing, but then you have to objectively look at it and say, was the regulation the best thing for the issue? Because there are issues with our space, and so it's not that there's not issues. It's not that we're putting our head in the sand. It's what's the best way to acknowledge that? And even with the issues, is the industry a net positive versus a net negative? And so with all of that, I don't know if you have any comments, but we'll play this video. We'll play it through the whole way, and then I have some backstory on like how Nicole got on our radar, and we're trying to work something out with her, and to date she's not interested in talking with us, which is fine. I would love to have a conversation with her in the future, but I saw this recently and I was like, oh, like this is a great video for this topic, and I think it does paint both sides. And I want to address some of the things that she talked about because I think it will very much make this episode a lot more entertaining. So with that, let's play the video.
So recently I did a video about how Kyle Busch lost $10 million on an indexed universal life policy. A lot of agents came out saying, well, it wasn't structured properly, or he went to the wrong person, or if he had come to me, that wouldn't have happened. And my question is, where do the excuses stop? Because here's what I'm seeing. It's becoming increasingly more common that these policies are not set up right. And every time someone loses money, the response is always the same. Oh, well, that agent didn't know what they were doing. Come to me and I'll do it right. But if it's always the other agent's fault, if it's always because it wasn't structured properly, if everyone selling these thinks they're the one who does it correctly, then we have a systemic problem, not just a bad apple. Kyle Busch didn't go to some random person off the street. He is a multimillionaire. He had advisors. He had people who were supposed to know what they were doing, and it still cost him $10 million. So to every agent who commented it wasn't structured properly, you're proving my point. If it's this easy to structure them wrong, if it happens this often, if even millionaires with financial teams can't avoid it, then maybe we need to stop selling them to everyone with a pulse. Enough excuses. People are losing their life savings, and if the best defense you have is they just didn't do it right, then you are part of the problem. When I talk my truth, when I talk about the fees, the underdelivering, my parents' story, the class action lawsuits, there is always a kind of surge of agents who will say, well, that's because of XYZ. And they have so many excuses. But the reality is this product is missold. People are not told that they can't access their money for 5 to 10 years. They are not told that they have to take a policy loan and pay interest to the company, not themselves, to access the money. They're not told how big the commissions are, and that comes out of their money. They're not told how big the fees are that are assessed not just on the life insurance part, but on the investment part itself. They don't know what cap rates are. They don't know how much money they're going to lose. And they don't know how important the effect long-term of tying up your money in an underperforming product is versus putting it in any other pure investment and creating wealth for themselves. And so I am drawing a line in the sand. I will stand on the right side of history when it comes to index universal life, whole life, and universal life. And I will continue to advocate through 21 years of experience and thousands of policies that I've looked at, that buy term invest the difference is almost always the correct advice for a family that has needs to protect and has to get their money invested to build wealth and independence for themselves. If you're an agent that has been selling these products maybe for years, with the belief that you have good intentions and they are great products, that's not necessarily your fault. That's probably training. That's probably some things that you've absorbed over time. But I encourage you to reach out. I am happy to talk. I'm happy to dissect policies side by side with you, because numbers are numbers and numbers don't lie when you learn how to interpret them. And maybe if you do have good intentions, it might be the right time to consider switching sides and become part of the solution and no longer be part of the problem. If you want to have a conversation or might even be ready to switch sides, reach out. I'd love to talk.
Amazing.
Well,
Before I give the floor to you, Caleb, you mentioned something that was super fascinating. At the end, it says, "Dear Whole Life Agents," and majority of the things that she talked about in there were definitely a direct correspondence to just Index Universal Life. And so she's very charismatic, speaks extremely well. Sounds like she's probably helped a ton of people financially, which is amazing. I would genuinely be curious though, if she does know the difference between like the three products of IUL, UL, and Whole Life. And that's kind of sometimes my thing when it comes to this space, is that I really want people to talk about these products that have the backlash for these products, that really understand them like at a very deep, intensive level. Because she said things like, hey, like you can't access for 5 to 10 years and other things like that. Nonetheless, it's just one of those things that for me is I wouldn't call it a pet peeve, but I just would love, because then you can have such a better story or a better conversation. And so with that being said, Caleb, I'd love to hear your take on it, and let's have a great conversation.
Oh, Dom, where do I begin? Where do I begin? I, first of all, want to just say I appreciate her video. I really do appreciate dialogue. And I do think it's important for us to be having these conversations, and there's a lot of issues. And to be fair, we were one of the first videos that came out with the Kyle Busch situation, and there's a lot of insurance people that hate our guts or are not a fan of our channel because they see us in the videos that we do exposing them. So I would like to say that we're probably more aligned than not aligned. I think where we disagree is, what do we do about it? Do we just say, oh, all things are bad, like let's get out? Or do we actually like lean in and say like, okay, is life insurance the issue, or is how it's being sold? And I actually believe that someone like Nicole believes that permanent life insurance is inherently bad. And as a result, if you're connected to that, you're not doing the right thing for your clients. Nicole, I would love to be wrong on this, but it would be an important distinction. Like if you actually believe that, then we need to first of all, have a conversation on, is there a play for life insurance? And if there is, then we can talk about how it's sold. If there's not a play, then it doesn't matter how you sell something. You could be super ethical, but if you still are selling something that's not right for somebody, then there's no play. And so that would be kind of the conversation that I would have with her around, first and foremost, in a perfect world, does permanent life insurance play a role? And if the answer is yes, then we can go into, okay, how do we make that happen? But if the answer is no, well, then there's going to be some agree to disagree moments, because it's like, okay, you say no, you say you're all about the math. Let's look at some research. Let's look at, the studies out there that says when you use life insurance and annuities, you can enhance better outcomes in the future. Is it selective math? Because I'll also be the first one to say you shouldn't put all your money in life insurance. There's a lot of bad things that happen in the life insurance space, but anytime you create a regulation, or anytime you're creating downstream consequences. And so you're totally right. She mentioned like the only way to access your money is policy loans. That's not true. You can only start accessing your money 5 to 10 years in. Okay, that's probably true to some policies. We'd be in the same camp to say that would be a problem.
But even if you did like an all base terrible IUL, like you still actually within 5, like within that could access some.
I mean, I'm giving her the benefit of the doubt that there could be some bad policies that are like the Kyle Busch example is a perfect example. Like the way, and also like going back to the talking point, well, if this happened to Kyle, it could happen to you. Yeah, agreed. That's why we need more people creating content. We need more videos like this to create exposure because what that does, anytime you create light and exposure, like it to use a biblical example, light, darkness flees from light. And it's like, oh, Captain Obvious over here. But there's some truth to that. When you can shed light on things and more transparency, the better. So anytime someone is fighting against transparency, beware. So the point that she made is like, we should not be afraid of transparency. We share very openly how commissions work and how things get paid. That doesn't mean that if you get paid more for something, it's inherently bad. It just means that it's an important piece to the pie. If one scenario you're getting paid a lot more money than another, well, that money's got to come from somewhere, and it indirectly comes from the consumer. And again, it doesn't make it right or wrong. There have been people on our channel that talk about why 100% base, which happens to get you paid more, potentially could be better for an estate planning. Totally willing to have that conversation, but the reason why a lot of insurance people are not maybe our biggest fans is we're pushing back on that. And indirectly, we're shedding light on something that they may feel like, oh, I hope my clients don't see this video because it exposes me. And so I just want you all to know, like, there's empathy when it comes to some of this stuff. It just comes down to like when we go into the DMV, do we really think like, oh yeah, we need more regulation? We need every industry to run like the DMV, or do you go back on supply and demand and say no, like the good actors should win, i.e. the people that are really willing to do it right should get more business and the bad actors should get exposed. That's why I'm a big fan of these videos. Like I'm actually a big fan of people blasting people online versus hiding behind regulations. I'm a big fan of more people speaking out and having debate because the more exposure to something should improve. We look at things like credit cards. The studies of credit cards are horrible. If I had to go basically and just make a statement, are credit cards good or bad? I would say credit cards are bad. But yet, Dom, you use a credit card, I use a credit card. I host people on our show that talk about credit cards. Why? Because nothing in life is super black and white. And so the same reason credit cards can lead to massive heartbreak and terrible financial decisions. Well, I'm on a trip in Naples, Florida, and a lot of this trip we're using credit card points to be able to make that happen. That doesn't like, it's just a one example of like, are credit cards good or bad? Well, we don't spend more money because we have a credit card because I don't look at it as free money. We're just using it as a way to efficiently spend. So my question would be, Nicole or other people, do you use credit cards? Well, isn't it pretty hypocritical if you're using credit cards, if credit cards by default have hurt way more people than life insurance? And it's not even close. The other example I mentioned before is starting business. Majority of businesses fail. Majority of people lose their money, lose a lot of their time, and make less money because of business. Are we about to say that business is a scam or that you should not start businesses? I think that would be crazy to say. And yet more people, if we want to play the game of more people lose, money on certain things, we could go the business route. The last route is driving. And maybe you guys have heard the cars going by as I speak. Just because people die every single day in cars, does that mean we should ban cars does that mean we should have crazy regulation? Now, to that, there have been regulations in driving. We have speed limits and there's people that enforce it. And so there's aspects of that can be good, but just like going out and banning something, I think is maybe a immature statement to make. So big picture, I go down to, is there a world where permanent life insurance can enhance someone's life? We first need to have that conversation. Then you can have the conversation of how it's being sold. And then you can go the route of, yes, life insurance can play a role and it's way abused. That's the route that I take. Life insurance, when set up and used properly, can play a role. There's a lot of people that have life licenses, they're selling it, and they're doing horrible things and not serving their people well. And I've publicly stated if I had to choose one side, I probably would choose the buy term and invest the difference for the same reasons why Nicole and many other people say. But then it's like, why are we dedicating our life to talking about insurance or at least dedicating our business to this? Well, it's because when set up and used properly, it can be really powerful. Just like someone dedicating their life to helping people be successful in business. Most businesses fail, but if you're successful in business, it can change your life. The same thing when it comes to life insurance. When life insurance, permanent life insurance, is designed properly, I've said a word that could be triggering, or designed properly, it really can make your financial life much better, not just before your retirement, after retirement, and in legacy. And if that's actually the case, what are we going to do? Just give up and say, oh, because there's more people that are doing it poorly, we should just throw in our towel and just go to the other side? Or should we fight to share the truth and put more light on everything? And that's where I'm at now. As it relates to the solutions, I do think there needs to be conversation. I do think we need to have an honest conversation about what do we do for the consumer, what kind of things need to be disclosed, education, and I think more people that do bad things should get exposed, and that there's something about being exposed that I think helps people change what they're up to. And so there should be consequences. It's really easy to get an insurance license. There's companies out there like network marketing style companies that I think do some good aspects. We've had conversations about PHP, an interview that I recently did. I interviewed the behind the scenes, and I think there's aspects of it that are really cool. They're getting more people term insurance and all, but I think like those companies could also give the industry a bad rap when it comes to like, and again, it's like whenever you're recruiting hundreds and thousands of people, there's always going to be some bad actors in that. And so you can have the best intentions in mind and still fall flat. So all that to say, that is like my initial thoughts. And that's why I want to have more conversations with Nicole. By the way, we reached out to Nicole to have her on the show, and she essentially said at this point, after seeing her content, she's not interested in talking. And I just want her to know, like, we would love to sit down, and I want to be my best to share her side. That's why I shared her public video, but I'm sure I'm biased in the way that I'm going about this. And she's welcome anytime to chat, and we would do so in a respectful way. And I think we would find that we agree on a lot more. I probably lean more to when life insurance is done well, it's actually net positive. And I don't know if she would believe that. And so as a result, no wonder she takes the stance that she takes, and no wonder I take the stance that I take.
All right. Well, now that we just let Caleb riff for, the last 10, 15 minutes.
People are listening. Yeah, thank you.
Are you guys still here? No, just kidding. Caleb always has incredible insights, and his deep passion just for to make the industry better. This is what this whole episode is about. So we do appreciate it. I think that what's interesting is a couple things. One, I couldn't have agreed with her more on a statement that she said where selling to everyone with a pulse, right? She's like, maybe we should stop doing that. And I'm like, amen, 100%. Like, this product and all products really are not for every single person with a pulse. It's got to be very specific for a very specific use case. And unfortunately, within the infinite banking space, the whole life space, the IUL space, there are people that advocate for this being the one-stop shop for everything completely, nothing else. And I do believe, because this actually was me when I first started in the industry, when you look at an index universal life policy on paper, so like strictly on paper, you didn't know nothing else about it. I even told myself, like, why in the world would you put your money anywhere else except for this product? It's a no-brainer. It's a duh, right? You get the downside protection with upside potential. You get a death benefit, and the dollars are greater than most investments when you're just looking at it sheerly from an on-paper perspective in a lot of instances. Just like, this is the greatest thing ever. But then obviously, as you become a little bit more mature in the space, you understand, you go through life lessons, you start to understand the reality behind the products, how they work, how they function, and they should not be sold to everybody. It should not be the one-stop shop just for all of your money. And the other thing is that she's probably negates to just mention of like, hey, for every 100 bad apples, there are really incredible stories where people's lives are impacted that change forever. Right? Having a permanent insurance policy in some instances really gives people that peace, the safety, the protection to give them more cash flow for looking at it surely from the two economic powers, but also just the protection for the family if somebody passes and dies. And it's like, yeah, well, you can do it with term, but obviously at some point, term insurance will run out. And so if your term insurance runs out and then somebody dies, should we then start talking about the story of like how we should just get rid of term insurance forever because it was so terrible? Like, no, like of course not. Like term has a great use case, but term isn't necessarily like the issue in that scenario. Like there's other things that were at play. And so with all that being said, the other only thing that I really am not necessarily the greatest fan of, although I did love the video. Like when I watched it, I was like nodding my head, like, yeah, like that's good. Like that's good. Obviously I didn't agree with everything, but she also represents one of the companies that, in my opinion, does not do a great job at the quote unquote, maybe it's a training product thing that she mentions. And the training aspect with how they do their recruiting model with Primerica is not necessarily a track record for massive success. You either can hear people in the space that talk about, hey, I've had a terrible experience with Primerica, or you can go online, you could see the reviews, you can see rabbit trails of the fruit that have came from that as a holistic way that they operate. Not saying that the agents are necessarily bad, just how the business model is from a recruiting, sharing, teaching. Because I've talked to actually a lot of really, really incredible people in the Primerica that work for Primerica, like really smart, super intelligent space for some people, but that's not necessarily the case. Like collectively, I would put like 1 to 5% of all agents that are working specifically for Primerica are like top tier, like super sophisticated. And outside of that, you have a bunch of moms, dads, aunts, uncles that are trying to figure it out and working for like quote unquote their side hustles that are talking about financial education that probably shouldn't be at one point in time. So I think the thing that you said the best though, Caleb, is that her and us were probably a lot closer and a lot more aligned than she believes. Like we actually want the industry to win. We actually want there to be better. We want there to be more reform. We want people to no longer get screwed over. We want what's best for people because we have a heart to serve. And then it's just like, well, how do we get rid of products completely, or do you essentially say, okay, let's just be better as an industry? So with all that being said, let's actually talk specifically.
Dom, I'm a fan of lawsuits. Like it's kind of stinks for even the companies that we're integrated with. They get sued, like but it's like it's the way of things working things out. And so if people feel like they got screwed or they want to get in a class action lawsuit, they need to hear it. And insurance companies need to be held accountable and agents need to be held accountable. And so I'm not opposed to coming to the table and saying like, how do we do this right? And I think though that technology alone, like you look at where AI is coming, soon, very soon, people are already doing it, but soon, very soon, it's going to be very hard to, it's going to be harder, I should say, to take advantage of people or not do things right. And that's something we're working on. And so that's like, do we want the energy to go into this place is bad, let's regulate the heck out of it? Or do we want the energy to go to, wait a second, like there's elements of greatness in the space and there's elements of ugliness. Let's put our energy and make it impossible for someone to stay in business doing the wrong thing. And let's put pressures on insurance companies that are doing stuff that maybe they shouldn't, or potentially enabling. I'll say enabling because they might not be endorsing, but they're enabling. And there have been people publicly that I may or may not have gotten legal letters from that I think are not doing the right thing. And I've shared it, called them out, brought them on the show. We've had conversations. People can, take whatever side you want. But I do think that's going to age extremely well for me. I think it's going to age extremely well for me. And like we're doing our best to say like, I don't think that this is legit at all. And I think you're doing someone a disservice by doing something like this. And we're putting light on it. And so not to say like, I'm just saying like that, I think the energy needs to be create solutions. And she's doing it in such a way to say like, hey, come on to this side, stop selling and all, which respect, like buy term and invest the difference is the better strategy for most people, especially with all the things that she laid out. And you're not going to get, like, I agree with that. I love term insurance. I have term insurance. My wife has term insurance. Term insurance is a phenomenal product that doesn't make it bad. The other irony is the same companies that you're promoting term insurance, the same companies that you're potentially selling term insurance have other insurance products. It's almost like, it's very ironic to be like, like it's the same people that, do like IUL and whole life, or like sell whole life, but the same company represents IUL, and they'll be like, it makes them have to dance. It's like a lot of these same insurance companies that sell term insurance also sell other financial products that you would potentially say are ripping people off. Aren't you enabling them ripping people off by you selling term insurance for them? Like those are statements that are just get you to start thinking. And I think we throw around the word scam and all where it's maybe a little aggressive. So with that, we can go on to the next talking point. But Nicole, if you happen to see this, or if anyone from your team sees this, would love to have a sit down and have maybe a part 2 to this, because more conversation the better. I'm sure we're missing certain things, and I think it would be important to see the people that you're seeing, because you're seeing policies that are not set up well, and that's got to be extremely frustrating. And we want your help exposing the bad products, because we see them, but we probably don't see them to the level that you see them based on the type of business that you guys do.
If you're an advisor, life insurance agent, or someone who just loves the life insurance space, we have a must-attend event for you. It's our 5th annual Life Insurance Summit, June 15th through the 17th, right here in Nashville, Tennessee. Not only are we going to have the biggest names in the life insurance space, but this is also an incredible opportunity for you to meet and connect with like-minded individuals and be a part of our ever-growing community. Learn more and get your tickets before they sell out in the link in the description or pinned comment. Can't wait to see you there.
With that being said, I don't know if there's a way, except for doing it her way, to like fully eliminate, quote unquote, the bad apples of the space. It is interesting that she did mention something, which I think is just ironic how humans work, is that people in the comment sections are like, if it was just set up properly, if it was just designed better, and again, if everybody was saying that, and everybody believed in that, and everybody was doing that, then this wouldn't be an issue, right? So it is actually just a very fascinating just conversation to bring up. It's just well, if that is the case, and everybody knows that you need to design it better and design it more properly, and why is this keep becoming an issue, right? And so what do we do in an industry that probably is never going to fix itself 100%? But I know some of the things that you mentioned is we need to keep creating content like this to keep bringing awareness into the space that, hey, this is a thing, we need to be better. And so this is why we appreciate people like her. And we've done other videos where we've reacted to other people that call the insurance company, and they're talking about IULs and how the policies are designed. And we want to obviously spread awareness. But outside of that, and just the sheer spreading awareness and us talking about it, what do you think needs to be done in the space to make this better? Because you're right, the insurance companies to some degree, in my opinion, are to blame as well. The way that they're designing some of these products with certain multipliers, with certain incentives, create a massive disincentive to create a massive incentive that creates a massive problem in the space collectively, right? And so what do we have to do, Caleb, to essentially make our industry better, so we no longer have these, at least limit the amount of bad apples, quote unquote, that are running around causing problems, that are creating the space that gives a score of 1 to 100, right? That puts us down at a 10 as used car salesman of trust in the space. How do we stop that?
The solution, I'm going to say this very confidently, so roast me in the comments, is to not sell life insurance as an investment. When you sell life insurance like an investment, or allude to it better than your investment or competing with your investment, that does not end well, and you are misrepresenting a product that is never intended to replace the thing that you're misrepresenting. And so there are people that use life insurance and they aggressively show income coming out of it. There are people that use index universal life, especially. You can do this in whole life, but you're an idiot if you're trying to juice the returns and use a whole life illustration versus an IUL. And so it's you can look at these things and you can make it look really amazing, and then play the whole tax advantage, blah, blah, blah. And it's just not going to age well. It's I feel I'm 29 years old and I feel like a 70-year-old person just telling you that. It's just not going to age well. And you won't sleep as well, and you will not deliver on your promises if you're positioning that way. And so if we eliminated people selling life insurance like an investment, like a replacement of an investment, like better than your investment. We eliminated all of that. I think we would, number one, most people would stop selling it because that's the only way that they know how to sell it. You even mentioned when you got into space and you're learning about IUL for the first time and what the insurance companies are telling you, it's like, why wouldn't you put everything into this? And I'm with you. But it's just like, it's not going to age well. So eliminate the investment conversation and educate people on, first and foremost, permanent protection. You're in protecting your greatest asset, which is yourself. Like that, you fundamentally need to understand the philosophy around permanent life insurance, the fact that you are going to die. We insure homes, we insure cars, we insure all these things. You will die. You have the ability to insure and protect something that will happen. And then you also have to understand this is a contract that in some cases are built on some really solid guarantees and have other attributes that enhance everything else that you're doing. And so the word integration needs to be paid more attention to, and understanding how life insurance integrates with what you're currently doing or what you should be doing by making it better. And it's hard. You played football, Dom. You could have an amazing offense, but if you have zero defense, your offense doesn't score one time, now you're vulnerable. And that is an example of like it's hard to do actual great planning if you're focused on all of one thing. I think it's somewhat criminal. I don't think we should have more regulations, just for the record. I think it's somewhat criminal for people to just put all their money into assets and index and do retirement planning that way. Now, am I calling for more regulation? No. Am I calling for more like education? And what are we trying to do is like, we're trying to say, hey, annuities and life insurance and reverse mortgages aren't inherently horrible. They're not inherently a scam. They can be integrated to actually enhance the investments that you're doing and give you a better outcome. And that's what we need to spend more time on. And I think if you just eliminate the talks, the insurance companies, what they can do is they can not show income from a policy. I know that there's some people that show like you should. I'm telling you, I don't think showing income is great. I get it from a projection standpoint, but I think you're opening up yourself to a lot of issues there. So you eliminate showing income and you sell on the attributes, integration attributes, not individual. And that's what I would do. And again, insurance companies, like, it's not like they're going to do this overnight, but you get sued enough and you get exposed enough, you're going to start changing your behaviors. So that's what I would do, Dom.
Amazing. Within the industry, there are certain levels of regulation that are obviously in place currently, right? You have twisting, which is convincing clients to replace an existing policy with a new one that's using like misleading or incomplete information, right? You have turning, which is like constantly replacing a client's policy to like generate new commissions that doesn't benefit the client. Like there's misrepresentation, lying or stretching like the truth about like guarantees, returns, like all this stuff. Even though those are like legally like in place and implications of like things that you shouldn't do, like you take your life insurance test, it talks about some of these things, but all these things still consistently happen, right? And so you said, hey, regulation's probably not the answer to some degree or another. If that's the case, is what you said truly like maybe the only solution is just like more education, having these insurance companies like turn off income and doing some of these things where we're just talking more about it? Because it seems like this space, right? They have the insurance industry space, the insurance commission, like commissioners, they have all of these things that are talking about on a consistent basis. They've put in a lot of new laws for, AG 40 with A and B when it comes to like IUL, things like that, right? There has been things that have been implemented, and it doesn't seem like they're necessarily helping. And so is there something else from a regulation perspective that we can actually do to help? Or does it need to be just with more transparency of like, hey, here's the commissions, like you almost have to disclose the commissions to the client of like, here's how much I make, right? And so that they see that. For us, that'd actually be a really good thing. Like we would actually love that, because if you're like now comparing like apples to apples, like we're making way less in a lot of the instances than somebody else. So it's like, oh, they're making less, they're making more. Like my natural instinct was like, we should work with the people that make less. That's like the natural inclination, even though I don't necessarily think that is always correct. Should it be that we are required to have more licenses, right? Does it mean that the insurance people should be a fiduciary, right? We know people that have a fiduciary that do things that are illegal, right? People that are fiduciaries, like I've seen people that have done pyramid schemes and do all these other things, right? And they create this massive chaos and not doing what's best for the client. People will be people. There will be greed. There'll be fear. There will be all of these things that come with human nature, but it doesn't necessarily mean that what we put in place with all of these regulations are the solutions, right? So now, how do we further the conversation on what we need to do outside of just the education? Is it the commission's conversation, or is it a regulation conversation that would be more helpful to expanding the side for us to move forth in an industry for reformation?
I think the more friction you create, and friction can be a good thing. A speed bump is a version of friction. We probably all hate them, but they do create it makes it harder to speed in that zone. And so all friction's not inherently bad, but I would say the more friction you create in the financial service has downward effects. This is what FinSec's big thing is. Regulations sound really good. Hey, Kyle Busch got screwed. Let's make it extremely difficult for this to happen again. And now you make it almost impossible to do business. And if you're heavily regulated, if you could be heavily sued, if you could heavily get in trouble, who are you not going to serve? You're not going to serve anyone that's not worth your time. And so let's just play this out here. Let's say that heavy regulations, I got to jump through a ton of hoops. Okay, I'm gonna still make a living. I'm just gonna work with fewer people and charge the people that can afford to work with me. And we're already seeing this happen. And so some people might say that that's a great thing. Then people will go get term insurance online, and they won't get screwed with permanent life insurance. And sure, like that's great. That probably will happen, but also you're discounting the other benefits of having some type of advisor or some type of financial professional to talk to. And so the other question is, will someone go get term insurance? Will someone invest the difference? Will someone do estate planning? Will someone write down their goals if it's based on their ability to just go online and do it? And why do I say go online and do it? Well, the more regulations you happen, yes, you're maybe eliminating certain people from getting taken advantage of, but you're also eliminating certain people that would never have bought life insurance, would never have started an estate plan, would never have started to save in general. And so that is it would obviously be awesome if you could create some type of regulation to only prohibit the bad apples, but everything goes on like normal. And that just it's just not happen that way. It's like there's trade-offs. And I just don't think right now, even if you look at the statistics, let's just say buy term and invest difference is an amazing strategy. The amount of people that don't have insurance in our country is insane. It's like, I think, Dom, quote me on that, like maybe ChatGPT this, but I think the number, especially when you include underinsured, is like over 50% of people that have no insurance or massively underinsured. And that alone should be that should put both of us, we need to make it, whether you do term insurance or permanent life insurance, the fact that 50% of people are underinsured or have no insurance at all is a big, big issue. And we should be very motivated to go for that. And that same reason of why those people may not have insurance only gets worse if you go the regulation route. Now, with all that said, I definitely think you make it harder on insurance companies because it's supply and demand. You make insurance companies responsible. Well, now they're going to get way more picky about how you sell things. Hey, don't misrepresent this. And so instead of you putting the regulation on the people to come police independent agents, you just say like, hey, this is a standard we need, and you make sure your people are creating this. And if it's a problem, we're coming after you. And now you're creating the public / private companies are now policing. And I think that would be a much more effective way to go about it, is because they'll can you in a moment if they see you misrepresenting something way before a lawsuit happens. So that, not that I have a silver ball, but like those would be some of the things that I would look into. And those are some of the talking points that are not original to me. Like that's FinSec's big thing, is defending the ordinary person to get representation. And the more regulation that we have, the more we demonize certain professions, are you just going to make it where it's like, you're just not worth my time? Why would I spend time doing a small whole life policy when the risk of backlash is so high? It's not worth my time. And so then you're going to go get term insurance, whether from me or from some internet shop.
You know, it's interesting. We started this conversation with talking about how to make the industry better. And one of the talking points that Nicole made was just to get rid of permanent products and just do buy term and death difference. Interestingly, there are a lot of the problems could be solved by that, right? And so I think we could agree with that, because there is a lot of negativity that comes with the space that we are in sometimes. But also, we've talked about that there's a lot of really amazing things that can come from it too, if done well. Another solution, how about we eliminate every single MLM company when it comes to the space as well? Like, you get rid of PHP, WFG, Primerica. I'm not saying that we should. I do believe in capitalism. But if you think about it, like, you probably would get rid of a lot of the bad trainings in a lot of instances. For better or for worse, I'm not a huge fan of, being captive when it comes to these insurance companies like a Mass Mutual or a Guardian going the career agent way, because I do think that optionality is a better thing. But when you really sit down with some of these people that have been they have a training program that's very specific, and a lot of them do come out from a very holistic standpoint that sell a good product and trying to do the best intention for people, because they have to go through a very long, intensive, like, mandatory training program, right? And I don't think that the WFG, PHP, Primerica way has that super mandatory extensive training that's required for them to be in the space. It's like, come to our webinars, come to our workshops, you'll learn from the people, like Shadow, like, those are all things, but that doesn't necessarily mean that the best comes out from a training perspective. Again, I do think education is probably the number one thing that we need to stick to, and we need to consistently keep pounding the drum for. And so, with all that being said, we could talk about this till we're blue in the face. We are 44 minutes, and we want to get to just like a couple, like 3 or 4 Q&A real quickly, because we always want to just be able to answer your questions in the comments. And I do think that one of the questions that are in this actually go fairly well when it comes to some of the things that we're talking about right now. And before I do that, Caleb, is there any last words that you want to say before we do so? No? Okay. So with that being said, the first Q&A is, what is the right way, just out of curiosity? And it comes down to just like the better way to design and structure, quote unquote, a whole life insurance policy, right? And it's very fascinating, because I'm not actually a huge fan of like designed properly, or using the words like necessarily like overfunded in some instances. The reason is because it's very subjective, right? I really do like when we use language and communication to be very specific and be objective when we're talking about money. And I think you have to start with obviously the end in mind for the person and getting very clear on what it is that they really want, because clarity equals confidence. And I think if a client has clarity around where they're wanting to go, and also clarity around how the financial products work, then all of the things that we're talking about in today's episode essentially get solved. And so clarity and education is where we have to start. And so by getting to that root of what the client / you really want is where we can start. And from a design, if you're like, hey, like, I want a whole life policy that's specifically for cash value that I can use for an activity such as investing, business opportunities, and you know why you want that and how it works, and you believe that borrowing against your policy to produce another activity will produce greater results for you and your family, and having a permanent death benefit and a tax advantage wrapper is a great thing, and you know that with your whole heart, well, then a properly designed policy will give you that type of cash value up front. An improperly designed policy in that instance that we just talked about will be all base, no cash value, because you don't have anything to borrow against and use for an activity. But on the other instance, if you're somebody that has a tax problem and wants to pass down a ton of wealth to the next generation or help with the tax bucket from a death benefit perspective, well, then an improperly structured policy would actually be the same policy that was properly structured for the previous person. And so having a high early cash value policy with a low death benefit in that instance would actually not be good for you because you already have probably a significant amount of wealth. You've built up a significant amount of bucket. And now what you need is you need the protection and you're in your later years of life. So then now you have one policy that was once upon a time improperly structured is now properly structured, and once was improperly structured, like, and vice versa, right? You get what I'm saying? And so you can't have a properly structured or an improperly structured without knowing the true intent of the person and what they're trying to accomplish. And once you do, you then can essentially backfill the properly structured policy. And that's the right way to structure it and design it. And don't let anybody fool you and say, like, this is better for you without them actually asking, like, what it is that you really want out of this policy in the first place. All right. We're going to do one more. I'm going to do one more, and the kids are going to do the last two, okay? So the next question is, when the annual dividend becomes greater than the annual base premium, does that mean that if you are unable to make any additional premium payments, that the policy could be paid with those dividends? Okay, so for everybody that's listening right now and they're trying to understand maybe some of the conceptual pieces of a whole life policy, right? You have the base policy, base part of the policy that creates the insurance piece, okay? It's the foundational piece that is required to pay every single year to keep the policy in force. The majority of that does take care of the death benefit piece of it. Over time, there will be pieces of that that will turn into paid up additions they'll create a dividend that will create some cash value that allows that to then be borrowed against and used in the future. But the thing that supersizes or supercharges the whole life policy when it comes to cash value specifically is when you add a paid up additions rider onto it, right? And so over time, your policy will grow large enough where the dividends will also become large enough. And again, when you're using a company that is mutual, that pays a dividend every single year, this is when dividend payments become possible. If you're using an insurance company that doesn't provide dividends and using a stock company, then it's not possible. But over time, your dividends can become large enough to where they can pay for the base policy portion of your insurance contract, okay? And when that does happen, yes, you actually no longer need to make any more premium payments for your policy because you have enough to essentially have the cash value, the dividend, to essentially pay for that. Now, if you're borrowing, max leveraging, and using it in a lot of ways, you can, in not paying the policy loan back by some instances, that could then be very dangerous, or that may not be possible because you now have a policy loan that's eating away at the cash value and the dividends that's not allowing that to happen. And you would then be forced to pay out of pocket for the base premium. But if you're using it in a responsible way, and you're not over leveraging these things, and you understand how to use it, and you understand the functionality of it, of course, the dividends can pay for your base policy, base portion of your policy, and you can have the policy without having to pay any more premiums out of pocket.
Yeah, appreciate you mentioning that. I talked to someone recently who's been around a while in our space, and this person uses the dividend to offset his policies. He also uses the dividend to pay for other insurances like car insurance and other things. And he actually gets a dividend check from the insurance company. And so it opened my eyes to there's a lot of different options you can use. And it's logically, if you're getting a dividend that's greater than your base premium, of course, if you wanted to get that to come to you and pay it or just have it pay for you, like there's a lot of different options that you could do. Now, is that efficient? That's why you would want to sit down with somebody and look at the best way. But yes, the short answer is you can do anything you want with a dividend, pretty much. Not anything, but you get the point. Okay, this next question is from Bob, and he says, if I just invest that money into the market and use that to fund it, I'd be better off. There's no way that the insurance company is going to beat the market, and they'll take their fees along with it. So let me reread that. If I just invest that money in the market and use that to fund it, I'd be much better off. Okay, so I'll just assume he's talking about buy term invest difference and just say, hey, put all your money in the market, because if you put money into permanent life insurance, your net worth is going to be smaller because the market over time is going to be able to outperform insurance. And Bob, you're totally right. If all you care about is the highest net number, you probably would be better off putting all your money, this is not investment advice, but you probably would be better off putting all your money in low-cost index funds, and you're going to get a better net worth number over 20, 30, 40 years than if you use other products like insurance or annuities. Now, why are you investing? A lot of times people invest to be able to take income out, potentially pass on legacy, and you're not necessarily going to get the best income that way. And so that is why someone would potentially incorporate other insurance products into that, but it's definitely not to outperform investments. And that's earlier, we literally said, do not sell in life insurance to try to outperform the market. And so I couldn't agree more with you, but I would also want to give context to even if your net worth was smaller, it can actually produce greater result. So that's what I would say to Bob. And then the next question comes from somebody that says, hello, complete noob here. I don't fully understand the reason for putting money into a policy than borrowing against it. Wouldn't it not be easier to just put money into a bank account and use it when you need? It looks to me the reason is that, number one, it's a tax deduction, and number two, it pays you dividends over time. Is that correct? Please respond like I'm talking to a 5-year-old. Okay, great question. First of all, if all you care about is easier, you're totally right. You should just put it into a savings account, because that is the way easier way to go about it, is not even to deal with any type of insurance product where you have to fill out an application, potentially take a health test. The easier route would be to use a savings account. So then why would someone choose a life insurance policy over a savings account? Is this thing, I made this t-shirt, had this t-shirt just for you. It's to create a better outcome. Now, better means different things to different people. Some people might care, like when they think of better, they think of better income, maybe better when it comes to reducing risk, maybe better when it comes to legacy, maybe better when it comes to control, maybe better when it comes to tax efficiency. There's different definitions of better, but if you were redirecting money into life insurance versus keeping it into a savings, the reason you would do that is over a long period of time, you believe you're going to get a better result putting it into life insurance versus a savings account. Now, you talk about two examples. You talk about a tax deduction, and then it pays you dividends. You actually don't get a tax deduction in most cases when you fund life insurance, meaning you don't get a tax benefit or like a tax benefit in that year. It's with after-tax dollars, so it's similar to like a Roth IRA, but once your money's in, it can grow tax deferred. It can be used, income tax free two ways, by withdrawing up to basis or taking loans against the policy. And that money gets paid income tax free, and usually the money that gets paid income tax free is far greater than what you've put in. And so for those reasons, that's like the reason why people like it. And then there's so many other benefits within there. And that's one of the things that we're trying to do a better job with, is showing people all the benefits you get with insurance. Not to say that it's better than other things, but to educate people on how, if they integrated it into other scenarios, what kind of outcomes that they would get. So if I was speaking to you like a 5th grader or 5-year-old, I would essentially say better is great, is better than easier. So what do we care more about? Do you want the easy way or do you want the better way? And if you want the better way, define better, and then figure out how to create financial products and strategies to get you that. And I believe when life insurance is set up and used properly, it probably could be one of the tools that you use to create a better scenario than just putting all your money into a savings account. That's how I'd answer that. You'd have to be a pretty smart 5th grade 5-year-old to maybe track with that, but I did my best.
Amazing. All right. What an episode. 50 minutes later, we hopefully we brought some value to you guys. And I also hope for you, Nicole, if you or your team is watching this, everything that we shared is truly out of love to make the industry better. We do appreciate what you're doing and being an advocate for your space. And just, you have a heart for people. It's very apparent and very obvious. And we created this episode with the intention of just like, how do we make the episode, or how do we make the industry better as well? So we're all on the same side. We want to essentially win. We don't want stories like the Kyle Busch scenario happening anymore. We want to essentially just help better, which is why we have the name Better Wealth. Like, we believe what we're doing is helping people find a better way. So with that being said, if you guys do want help setting up a policy, if you guys do think that this product, whole life insurance, is a better way to help you increase your goals financially, obviously click the link below. We'd be more than happy to have a great conversation with you. And with that being said, in the comments, I'd actually love to hear from you guys if you're an advisor on how do you think that the industry can be made better, right? I would love to hear from everybody else as well, their perspective. And so with that being said, until next time, have a great day.